Good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100 for Wednesday, August 18th, 2021. Well, the NASDAQ did, I feel, make itself very clear today, along with the S&P and the other markets. The market sold off again pretty solidly this afternoon after the Fed minutes were released. And what it did again is it broke below a level that I did not want to see it break, which was 14,897, and actually kind of slid below the next support zone, come on, at 14,811. Now it recovered that zone, it recovered that support level, and is now moving up fairly solidly right now, or just in the early after hour trade because of NVIDIA's earnings. NVIDIA is up about $4 to $5 right now. And so I actually don't think it's going to last because of what the overall market now is likely going to be doing. But in any case, what today's break again, and then breaking a lower level, it leaves the last absolute holdout at 14,803, actually 11. No, I take it back, 14,774. That level, if it holds, may do nothing more than just complete this initial decline. And that being the case, I am now gone back, relabeled all of this mess, which ends up being a minute fifth wave to complete the minor fifth wave, to complete the intermediate fifth wave, to complete the primary fifth wave, to complete the cycle fifth wave. We are at that high, and it failed. It failed because it did not take out the high of wave 3. And so this immediate sell-off is due to several things, but technically it should be well expected if indeed this is the failure of that fifth wave and the fifth wave subsequent. So basically it's just a failure of the minute level, and that's it, because on the minor level it did move to a new high over wave 3. So it failed on the minute level, but on the other levels, it is appropriate. It can be used as the completion point, even though the minute level failed. And so what that does tell us is that there's a lot of weakness in the market, obviously. And that today's break puts me in a position to say 1, 2, 3 in progress. And I don't think it's done. So where wave 3 would be equal to wave 1 comes in at 14,795. Now, I don't think that that's where this is going to complete because of the intensity of this slide and what could get picked up. I would look for 1.618, which is the next level on a Fibonacci basis as a relationship between third waves and first waves, is that if this wave extends, which I think it can, then we're looking at 14,645. Initially, yes, we have supported 14,795, 738, and 702. But I think it stair steps its way down there. Again, remember, third waves, it's going to put in 5 waves of its own. And one of those 5 waves can subdivide in and of itself. So there's plenty of room for it to get down to here and then some. So that's what I'm now expecting. We're going to wait and see what basically happens with NVIDIA and how much NVIDIA can actually power up this entire index. When I don't know the weighting of the video, but I do know that Apple's weighting is higher, Amazon's weighting is higher, Facebook's weighting is higher. Google's weighting is higher. Tesla's weighting is higher in this index than NVIDIA. So how much will it actually place in terms of upside support? I think is very minimal. And it could continue to go up, but I believe the balance of the market will sell off. And then eventually NVIDIA will catch on. So I think the highs are in. And it's unfortunate that it ended in a failure, but it does clean up the mess in terms of is really believing, okay, one last thing that I could do is push this fourth wave over to here. And that still could possibly follow through and be the count. But I just don't see it at this point, not with the market doing this, breaking that level, not once, or this one once, and then twice, and then breaking this one, which just gives confirmation. One other thing that I want to point out, moving averages, I flip out, when the hourly starts to break down, I flip out to the daily chart, and I need to take a look at what those moving averages are telling us. And here is the major story for today. So you have the 20-day moving average. Let's see if I can even blow this up even more. Come on, please do it. Let's see if I can do that so that we really can see it. Come on. All right. Anyway, the 20-day moving averages come here. It did break below it yesterday, but it recovered. And so it ended up closing just above it. So today, the confirmation of the weakness in the market would come the following day when that moving average is again broken, but then the market closes below it. So this stood the test that if it had gotten down here, broke it, but rallied back up and continued the rally, then that 20 holds strong as support. But the fact that it broke below, back below it, and closed below it suggests and indicates weakness, strong weakness in the market, because this is on the daily chart. So it's strong weakness. That suggests we go down to the 50. And in the 50-day moving average right now sits at 14,678, 78, 79. And where I'm thinking the market could end up is 14,675 before it puts in a bounce. So actually now we have another little marker to where this third wave could finish, give us a little fourth wave bounce, and then an additional 5 waves down. And if I can get those 5 waves on the hourly and on the daily, we're cooked. Tops are in, and we're off to the races in terms of where's this correction going to go. Initially, I can say that it's going to find some support at the wave 4 levels. So the first one is 14,774. I think that gets broken pretty easily. And then the next one down is 14,445. So we look to where this third wave could really stack up some points, and we're getting dang close to this level. So again, once that's complete, then we're able to draw what we think the 5th wave will look like, because I can then connect retracements, or no, excuse me, extensions from the top of wave 3 down and then connect it to wave 4. The top of 3 to the bottom of 3, and then up to the top of 4 once I get that in. And then we will have our indications of where the 5th wave should come. Now, again, on a daily chart, that's not looking real good. That's looking like we will get there pretty quickly. So once again, even on the daily, it can be a very serious slide. And then when we go back out to the daily, so I'm looking for here, get a little 4, and then we come down right below that 50, which then suggests this is where we're going to go. And that lines up with our additional support. Our additional support comes below. As these moving averages are broken, particularly on the daily level, they're major. And so I would expect when they're broken solidly, you're going to get acceleration, just like we did when that 20 broke again this afternoon. It slid. and it slid quickly, and it slid with conviction. People were moving out. They were getting out of those positions. I would suspect that the exact same thing will happen at the 50 and eventually at the 200. But right now, we're dealing with these upper levels. So support for tomorrow, 14,774. And then we have that 618, 1.618, all wrapped around 14,678 to 665. Then below that, we have 14,445. Now remember, this is the initial decline off of all-time highs, off of major advances completing. So we're going to see a lot of acceleration to the downside as more positions are being liquidated. Get me out, or for whatever reason, things are going to shift and they're going to move. And if we thought that there weren't any sellers on the way up, they're the ones that are short still. They're not going to be stepping in to start covering those shorts when they got to take so much pain as they did on the way up. So again, that thin market, those orders that are coming in at the sell at the market, they will move to where they can get filled. And that produces a stronger slide lower. So keep that in mind. Keep your wits about you. Understand that bounces are going to be stronger, because if the market is sliding, it's going to move quickly to the upside as well. So when a big order comes in that it's to buy, it's going to ding, 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 ding. It's just going to go straight up. Now that could well be a selling opportunity, but be careful, because depending on your account size, depending on your risk profile is, you could short it too early and then it moves up against you. And in the NASDAQ, you could be down $300, $400, $500, $600 in a heartbeat. So we really need to kind of hone in on what we're doing, how we're doing it, and what risk profile we can accept. Now, you need to get out of a trade quickly, and still, it's the same idea. You just have to follow it up. And then when it does turn and you get confirmation that it's turning again, you can re-enter. But to sit through that kind of a loss, it gets really difficult. So I'm going to leave it all there, because the trade talk is more for my trade room. And once again, that summer promotion is still in effect, folks. If you've been thinking about joining a trade room, if you like the analysis that I've been presenting, we do this every day and we trade it. I'm going to leave it there. Tomorrow, I'm expecting additional downside. We will reach that support level, and then I have to consider that we will do a small bounce. Now, the bounce will come from if we put the retracement levels on this high. That's where it is, to wherever this bottoms. Then you're going to get your retracement levels for a fourth wave. And that's what I've been looking for. 1, 2, 3, a fourth wave back up. Remember, 0.382, 0.50. Those are the most common for fourth wave. Actually, 0.382 is the most common. So 38% retracement of the drop from that high. That would be my expectation, if it can get there. We're already exhibiting some pretty strong weakness in the market right now. If that continues through tomorrow, then bounces are even going to come in less, because the sellers are going to be urgent. The sellers are going to be, get me out, get me out. So it depends on how things get stacked up. So again, use your moving averages, keep your Elliott and your Fibonacci retracements in mind and on your screens. Support levels and then retracement levels. Those are all going to be important, and they're going to help to guide you, to give you a heads up on what the potential is for a particular move. That's where I'm going to leave it, folks. If you have any ideas or if you have any thoughts, please, you can email me, get in contact with me. Think about joining the trade room. It's going to be fun. Trading this down is going to be fun. Today, there were a ton of opportunities, and they came in both directions, actually. So next update will be Thursday, the 18th of August. Excuse me, Thursday, the 19th of August.